Welcome to the deep dive. Today, we're looking at a company that, well, pulled off quite the corporate judo move recently. It's fascinating.
It really is. 1 minute they're kind of fending off what looked like maybe a hostile entry.
Right.
And then boom, the next day they announced this plan to, get this, double their core profits every single year for the next 4 years.
That's just huge. And the company is Bangchak Corporation, BCP. So our mission today is to unpack how this all went down. We've got source material covering sort of two sides of the story, right?
Exactly. First, there's the initial, let's call it drama, around a major new shareholder, the charter group. And then there's BCP's big counter move, this really aggressive corporate restructuring plan aiming for that 100% annual growth in EBITDA.
Okay, let's start with that drama, because the sources definitely talk about some real concern among investors, fears of a takeover, even talk of grabbing Bangchak.
Yeah, that language was out there.
And it all stemmed from the charter group buying a big chunk of shares and then immediately sending two people to the board. I mean, for the average person watching, that definitely sounds like trouble brewing.
It could sound like that, yeah. But this is where BCP's leadership, specifically the CEO, Chaiwat Kovisarak, stepped in pretty quickly. He essentially said, hold on, let's look at the rule book here.
The classic standard procedure defense.
Pretty much. He framed it as completely normal corporate governance, standard practice for any listed company, a board to have major shareholders represented on the board.
Okay.
And that's kind of the first big takeaway for anyone learning about this. Sometimes what feels like high-stakes corporate tension is really just, well, the gears of a large listed company turning as usual.
But just saying it's standard doesn't always make the fear go away, does it? That whole hostile takeover narrative is powerful. So how did BCP actually, calm things down? How did they convince people that these new board members wouldn't just hijack the strategy?
They did it by pointing to the existing structure. They basically laid it out and said, look who's already here. Look at the balance. The board has 15 members in total.
15, okay.
So while the charter group got 2 seats, which sounds significant in isolation,
Right.
they're sitting alongside these really established, powerful groups that have been there a long time.
So who are these big players then? Let's put that context out there for you listening.
Well, you've got the big institutional shareholders. Think about the Ministry of Finance, for instance. They're a major anchor. They have 2 representatives. And their influence comes not just from their direct stake, which is almost 5%.
Okay, 4.76%.
Right, but also through the Vayupak Fund, which holds nearly 20%. That's huge.
Wow, yeah.
And then you've got the Social Security Office, another big one. They hold over 15%.
So, okay, when you lay it out like that, charter group's 2 seats suddenly seem, well, less like a controlling stake and more like just another voice in a pretty crowded room.
Exactly. It stops looking like some kind of hostile seizure pretty quickly when you see the actual percentages and the total board size.
Right.
And the CEO really hammered this point home. He talked about the professionalism of the board, that they've had, 10 or 11 years of clear management processes already in place. And here's a detail I found interesting. This new strategic plan, the massive one we're about to get into, the board didn't just nod it through.
No.
Apparently, they spent a full, intense day just grilling the management team, questioning, challenging, scrutinizing every bit of it before they gave the okay.
A whole day. Okay, that is a critical detail.
It shows it wasn't a rubber stamp exercise.
Yeah, it demonstrates that the governance isn't just about following rules on paper, it's active. They're actually stress testing the strategy to protect shareholder interests. So, okay, they navigated the governance storm, pointed to the rules, showed their internal process was solid, but just following rules doesn't get you 100% growth. How did they flip from that defensive posture to this incredibly aggressive offensive strategy?
That pivot. That's where the story really takes off.
Yeah.
They are absolutely charging ahead now, focusing on energy security and sustainability. But the headline grabber, the thing that makes you sit up, is that financial target.
Right.
BCP is targeting 100% growth in EBITDA per year.
Hang on. 100% annual EBITDA growth. For a company this size, that sounds, well, frankly, almost unbelievable. Is that just like a massively ambitious goal for show, or do they have a real strategy behind it?
The sources definitely suggest it's the latter. It doesn't feel like just PR. This target seems to be the absolute driving force behind a complete overhaul of the organization.
Okay.
The goal is to hit that rate by 2571, so it's 2028. And yeah, to make that kind of leap, they basically realized they needed a totally new way of operating.
So how do you restructure a giant energy company to chase something they're calling what was it, 100x growth?
Yeah, Bangchak 100X. The mechanism is this huge organizational restructuring. They're splitting into 5 distinct business groups designed to work together, synergistically.
5 group.
And this big change officially kicks in January 1st, 2569, which is 2026. So this new structure is meant to be the engine for that Bangchak 100X vision. It's a massive undertaking.
Giving it a name like Bangchak 100x certainly makes it sound ambitious. Okay, let's dive into these 5 groups. They must be the key to how this whole thing works. Group 1.
Right. Group 1 is the refining, marketing, and biofuel group. This one's really about consolidation and efficiency. They're formally merging their 2 main refineries, Phra Kanong and Sriracha.
Makes sense.
The idea is pretty straightforward. Create synergy, cut costs, make the whole supply chain run smoother. It's about shoring up that core business, making sure the foundation is solid and profitable.
Okay, a strong base. What about Group 2? Sounds like they're looking outwards more with that one.
Exactly. Group 2 is the oil trading group. And they're really elevating this. It's being called a flagship business now.
Flagship, okay.
So historically, trading was mostly about getting crude oil into their own refineries, but now the plan is much bigger. They want to turn trading into a major profit center in its own right.
How?
By really pushing into the domestic and regional markets, aiming for more volume, more value, plus adding sophisticated risk management on top. Basically, become a big regional player in oil trading.
Interesting. So groups 1 and 2 are kind of optimizing the current energy core, squeezing more value out. What about Group 3, the exploration side?
Group 3 is the upstream business group.
Mm.
The ambition here is pretty clear. Become a leading mid-range oil and gas producer focused on Southeast Asia.
Mid-range, okay.
Yeah, so they're talking about growing their exploration and production E&P. And they're not starting from zero. They plan to use the expertise they've got from their assets up in Norway, Okia SA.
Ah, right.
And use that knowledge base to really expand aggressively across the region. So yeah, you could say groups 1, 2, and 3 are designed to maximize and stabilize that traditional energy foundation.
Okay, foundation stabilized. Now, groups 4 and 5. These feel like where the really dramatic growth has to come from to hit that 100% annual target. Let's talk Group 4. Sounds like a big shift.
It is. Group 4 is the electricity and infrastructure group. Okay. This involves BCPG, which most people know for clean energy, right? Electricity generation.
Solar, wind, that kind of thing.
Exactly.
Right.
Well, it's undergoing a huge transformation. Clean energy is still part of it, but they're expanding into critical infrastructure projects that offer potentially much higher returns, specifically data centers.
Data centers. Okay, that is a pivot. Moving from just green power into the nuts and bolts of the digital economy. Why data centers? What's the logic there?
It seems to be purely about return on investment. I mean, data centers are booming everywhere thanks to AI, cloud, all of that.
It's true.
And BCP clearly believes these offer much better returns than sticking only to their existing clean energy projects. And think about the synergy, right? Well, BCPG already knows energy. They know infrastructure. They could potentially power these data centers themselves, maybe even manage them using their existing skills. It creates this kind of integrated, maybe high margin, possibly even asset light model, depending on how they structure it. This feels like the piece designed to give them that exponential growth curve that the traditional stuff just can't deliver alone.
That makes the 100x goal feel a bit more grounded, maybe, balancing the steady cash cows with these higher risk, higher reward digital plays. Okay, what about the final piece, Group 5?
Group 5 is the new business and holding group. Think of this as their future lab, maybe, their venture arm.
Okay.
Its job is sort of twofold. First, invest in things completely outside the other 4 groups. Real diversification. Blue sky thinking, perhaps.
What's the second?
Second, it manages a dedicated innovation fund.
Oh, interesting. How much are arcing about for that fund?
The sources mention around 1 billion Thai baht.
Yeah.
Specifically earmarked for new tech startups, cutting edge stuff.
1 billion baht.
Yeah. So this group is about ensuring BCP isn't just looking at 2028, but thinking way beyond that, 5, 10, 15 years out. See the structure. Groups 1 to 3 secure the cash flow now. Group 4 provides the big lift towards the 2028 goal, and Group 5 keeps them looking ahead.
That is remarkably well structured, actually. But these kinds of massive changes always need massive funding. Let's talk money. What's the CapEx plan look like? The capital expenditure for, say, the 3 years leading up to that 2028 target, so 2569 to 2571.
Okay, the total planned CapEx for that 3-year window is 35 billion Thai baht.
35 billion, okay.
But the way they're allocating it is really revealing, I think. The biggest chunk, a whopping 63%, is just for maintenance. keeping the existing machinery running smoothly.
63% on maintenance?
Yeah. Then another 20% is for ongoing projects they were already committed to.
Right.
Which leaves only 17% specifically for new growth investments. The stuff tied directly to this 100X strategy.
Wait, only 17% for the 100X growth drivers. That feels kind of small, doesn't it?
Yeah.
Especially compared to 63% just for upkeep. Are they serious about explosive growth with that kind of split?
It does seem counterintuitive at first glance, right?
Yeah.
But I think it signals something else. It suggests maybe prudence, not necessarily a lack of ambition.
What do you mean?
Well, it could mean BCP believes they can get that explosive growth mainly from those higher return, possibly less capital-intensive investments like the data centers we talked about. Maybe they don't need massive traditional CapEx for that specific growth.
Oh, okay.
And spending so much, that 63%, on maintenance, that sends a strong signal to the market that their core assets, the cash cows, are solid, reliable, and will keep generating the cash needed to fund that 17% slice of higher risk, potentially higher reward stuff.
Yeah.
It's like financial stability underpinning the aggressive moves.
That totally reframes it. Okay, that makes more sense. Strategic allocation, not just numbers on a page. So finally, after all the initial jitters about governance, what are they doing directly to boost investor confidence, to reward shareholders?
They announced something very direct, very tangible. The board approved, in principle at least, a continuous share buyback program over 3 years.
A 3-year share buyback, that's a serious commitment.
It's a huge signal to the market. It's the company basically saying, look, we believe in our strategy so much, we think our stock is undervalued, and we're putting our money where our mouth is to return value directly to you, the shareholders.
Yeah, that definitely backs up the bold strategy talk with real action, which is confidence.
Absolutely. And the details, the exact amounts, the timing of the buybacks, those are going to be worked out and presented for final board approval sometime this year, 2025. So it's happening soon. It's a concrete step to keep shareholders happy while they roll out this complex new structure. So if you sort of pull back and look at the whole arc, BCP went from tackling this governance controversy, which they pretty much dismissed as business as usual, straight into launching this incredibly ambitious forward-looking plan. 5 integrated business groups, a clear capital plan, and this direct boost for shareholders through the buyback. It's quite a turnaround narrative.
It really is. The sheer scale of the ambition is what stands out. Banktrack 100X, they've laid out a path. Optimize the oil side, make a big bet on digital infrastructure, and keep an eye on the future with venture funding. But it feels like so much hinges on that pivot into infrastructure.
That pivot, especially getting BCPG heavily into things like data centers, feels absolutely crucial. That's where the potential for that kind of exponential growth seems to lie. So, thinking about that 100% annual EBITDA target by 2028, we'll leave you, the listener, with this to think about.
Okay.
Given everything we've discussed, the stable base, the upstream plans, the big infrastructure move, the innovation fund, which of these 5 new groups do you think will really be the main engine? Which one has to deliver disproportionately for BCP to actually hit that incredible 100% annual profit increase target? Something to mull over.